Hello, everyone. Thank you for joining us today. We're going to give folks another minute or two to jump in, and then we'll get started. And as folks are jumping in, just want to make sure that everybody can see the Q&A box. That's where you'll direct your questions throughout the program today, and we'll have time at the end to make sure we answer those. The chat is available as well, but really, if you want a question answered, make sure you put it in that Q&A box. And with that, I'm going to go ahead and get started. So welcome again. Thank you all for being here today. Like I said, we hope that you take advantage of the Q&A function here. We'll have time to answer questions at the end. So make sure they're going into that box and we'll compile them to get to as many as we can with time allowing. So we are here today to talk about how to navigate the Inflation Reduction Act, specifically when we're talking about those EV tax credits. So to kind of kick things off here, my name is Emily Pape. I'm a senior associate with the Electrification Coalition. And joining me today is Torrin Spencer, who is also a senior associate with the Electrification Coalition. And while we like to think of ourselves as experts in the EV space, we are not tax professionals. And so just take that under consideration with any information that we give today. For those of you who are not familiar with our organization, or maybe it's been a while since you've joined one of our webinars, the Electrification Coalition is a nonpartisan, nonprofit organization that develops and implements really this broad set of strategies aimed at facilitating widespread adoption of electric vehicles. So we work all across the country, coast to coast and everything in between. And our goal is really to overcome the challenges we see, specifically economic, public health, and national security challenges that stem from America's dependence on oil. So that's really where our work comes from and what we're aiming to do through transportation electrification. To that end, we play a variety of roles for a variety of organizations. We have worked as fleet technical lead for organizations. We also have teams working on local, state, and federal EV policy. Again, that's all across the country. We've advised a number of cities on electrification policies and programming. We also have teams dedicated to medium and heavy duty electrification. So looking at the freight side of things and ports and kind of all those other things that need to be moved around the country. We also do quite a bit on project leadership and coordination. And then at our core is really advocacy and education and providing expertise across the board when it comes to transportation and electrification, what that means from the federal policy that we're going to talk about today, but also onto the streets, of your hometown. Now, before we really dive into these tax credits, I just wanted to take a moment to highlight a new funding opportunity from our friends over at the Joint Office. And this is the Communities Taking Charge Accelerator. And so the goal with this program is really to fund just innovative approaches aimed at expanding EV adoption and charging access, especially at the local level, in those urbanized areas where land use, density, car ownership rates, maybe a lot of folks don't own cars, grid considerations, and other factors kind of can add additional complexity to electrifying transportation. While at the same time in these areas, you really see demand for transportation access at its highest. So really honing in on those areas and aiming to fund the folks who are taking the lead at solving these challenges. And so this opportunity applies to planning, demonstration, and deployment projects. So really any of those. More specifically, there's $45 million in funding available, 3 different topic areas, which include solving for no home charging, so expanding charging access for privately owned e-mobility. Then there's expanding e-mobility solutions through electrified micro, light, and medium duty fleets. And then finally, the third type is managed charging for clean renewable energy. And so you can see here the anticipated number of awards, anticipated award range, and total amount of funding. So if you are interested, all organizations will be required to submit concept papers prior to applying for funding, and projects should really have a team lead and project partners, and teaming arrangements are encouraged for this particular opportunity. So finally, on this particular opportunity, here's a couple of the key dates you want to keep an eye on. One to note clearly is that the May 20th deadline for submitting those concept papers that I referenced is coming up. That'll be in just a couple weeks from now. So if you're interested, that's really the one to focus on. And you can see here that throughout the summer, a couple other deadlines, and then the date for selection notifications will be around the end of the year. So I will now turn things over to Torin to really get into the meat of what we're going to talk about today with those IRA tax credits. So Torin, take it away.
Thanks, Emily. Appreciate you. Hey, everybody. Thanks again. Torin Spencer, Senior Associate with Electrification Coalition. Been with the team since about 2020, been working on consumer EV adoption, fleet EV adoption, and workplace EVSE implementation, as well as IRA tax credits. Like Emily said earlier, we are not a tax entity. We are not trying to give tax advice. We want to give you guys as much information as possible, but we also want to encourage you to consult a tax professional, accountant, your legal team for questions regarding eligibility for these tax credits when it comes to elective pay or non-elective pay. There are a number of new tax credits that have come from the Inflation Reduction Act. We focus on 2 of them. EC works with EVs, so that's the Commercial Clean Vehicle Credit 45W and the credit for alternative fueling, fuel vehicle refueling and charging property. That's why we just call it 30C. It's certainly a mouthful. 10 other really strong tax credits in there, not necessarily experts on those. Again, if you need more information, consult your tax professional or check out Lawyers for Good Governance or irs.gov. Elective pay. So this is actually a new feature that allows tax-exempt entities who originally weren't able to take advantage of tax credits, considering they didn't pay taxes regularly. This gives them the chance to take advantage of those same incentives that other private entities can take advantage of. So what is it? It's that new mechanism. So tax-exempt and governmental agencies that are originally exempt from tax credits, they are now eligible for those. Works like a tax credit that you might get on your personal taxes. So different entities that are now eligible for elected pay include state and local governments, tribal entities, rural co-ops, and other tax-exempt entities like nonprofits. This applies to all of those 12 IRA tax credits, including 45W and 30C that we'll be talking about today. But this applies to entities that were previously excluded from tax credits due to that federal tax burden. There's a lot of decisions required in figuring out if you are eligible for elected pay, depending on your entity type and project. We've worked with a number of colleagues on a decision tree to try to simplify the process, since it is a number of steps. Got to start with determining your entity type, whether you're public or nonprofit. If you're public or nonprofit, in order to receive elective pay, you have to register through the irs.gov portal. Once you've determined your entity type, determining your project type, the projects actually have to be put in service during the tax year in order to be eligible for elective pay. So the different projects types that we specialize in would be electric vehicles for fleets or electric vehicle charging stations / EVSE for short. Now, if you're going to put in a new electric vehicle into your fleet, couple forms you have to complete, 8936 and Schedule A. We'll get into those in a little bit. And then add those to the bottom there, Form 3800 for your general credit. EVSE is a little bit more complex. You have to figure out if EVSE is eligible within the 30C location map. So the IRS has actually put together a pretty solid tool as well with Argonne National Labs. They've built out the 30C eligibility map, and that eligibility map covers non-urban and low-income areas. So if it's within that 30C eligible area, then you would complete 8911, add that to 3800, and then at the bottom, it does include, does the EV charging station project meet prevailing wage and apprenticeship requirements, or PWA? If it does, then it's eligible for 30% of the EVSE project cost. If not, it's eligible for 6% of the EVSE project cost, and that is up to $100,000 combined. So a lot of information to cover a lot of questions in that process. This document can kind of break it down for those that aren't doing federal taxes on the regular for tax-exempt entities. This is available on electrificationcoalition.org, as well as some other resources and annotated tax forms that we'll cover in just a little bit. And then I believe Emily is going to cover the Commercial Clean Vehicle Tax Credit 45W.
Thank you, Torin. Yeah, so I know that we just gave you a lot of information about elective pay and about these credits, but don't worry, we're going to break it down a little bit more here. And for those of you from private entities that elective pay maybe doesn't apply to, you just go right through, file for these tax credits like when you normally would do your taxes. So first up, we have this Commercial Clean Vehicle Tax Credit, which we'll refer to as 45W. So at its core, this tax credit allows for up to $7,500 back for each light-duty vehicle, and so those would be under 14,000 pounds. For medium and heavy-duty vehicles, this tax credit allows for whatever's less, between 30% of the base price of the vehicle or $40,000. So the example here would be if you buy a medium or heavy duty vehicle that costs $100,000, you would get the $30,000 with that being 30% of the purchase price, as opposed you wouldn't get that $40,000. So you may have heard about sourcing requirements when folks in the news are talking about these EV tax credits. Certain amount of the vehicles have to be assembled in North America, that sort of thing. However, these requirements do not apply to this tax credit. So if you are buying EVs for your business, for your city, and want to take advantage of 45W, you do not have to worry about that. So there are no requirements relating to critical minerals or domestic sourcing in order to claim this tax credit. And as kind of an added benefit here as well, plug-in hybrids are also eligible for this tax credit. So if you're looking for an EV and it doesn't quite meet your needs, but you find a plug-in hybrid that does, you can also claim this credit. The requirements there are that the battery capacity of a light-duty plug-in hybrid has to be at least 7 kilowatt hours. If that plug-in hybrid is a medium or heavy-duty vehicle, that battery capacity then has to be at least 15 kilowatt hours. So to give you a sense of kind of what eligible projects would look like under this tax credit, here are a couple projects we've seen partners use or hope to use for this project or for this credit. And again, really reiterating that this is the first time that tax exempt entities can claim this type of credit. And so with our tax exempt entities that we work with, we've seen projects that include municipal fleet vehicles. So your, Parks and Rec department has a couple sedans. They want to replace those with EVs. Those would qualify. Police vehicles, whether that would be, undercover or squad cars or whatever that looks like. Also ambulances, public transit buses, and school buses. So those are some examples that tax exempt entities might take advantage of. For private businesses, it would really be, the equivalent of this. So any EV bought for your business purposes, that would qualify under this tax credit. So if that's just, company cars that employees can take and use for company business, or maybe you have a large campus and you want an electric shuttle to move your employees around that campus, those are kind of the sorts of examples that would apply to a private business. So another example here, kind of looking at that tax exempt entity again under this tax credit. So just painting a picture here of a school district that received a tax exempt grant for $300,000, and they used that grant to purchase an electric school bus. So under the IRA, these clean commercial vehicles, which the school bus is one, are eligible for a tax credit of up to $40,000, which we've covered. So the district then takes that $300,000 grant, goes buys the bus for $400,000. So that means they used the grant for $300,000. They used school district unrestricted funds for $100,000. So from there, the school district's basis in the electric school bus is $400,000. And that means they can claim $40,000 for the 45W credit. And they can do that because the amount of the restricted tax exempt grant plus the 45W credit, which totals to $340,000, is less than the cost of the electric bus. And so the school district gets to claim that entire credit. Essentially, the idea here is that you can't make money buying an electric school bus or other commercial clean vehicle. Really, they want to make sure that you're not exceeding the cost of it through grants and through tax credits. And so kind of in an opposite example, if the grant they received was $375,000, while their stake would still be $400,000 total, they would only get $25,000 in credit, because if they were to get the $40,000 in credit, they would end up with more money than the bus itself was actually worth. So just kind of to wrap 45W up, here are just a couple things to consider if you're looking at this tax credit. So leasing is not eligible. You have to own the asset. Dealers may claim this credit when they're purchasing vehicles for their fleet, and they may pass that discount on to you. But in that case, you would benefit from the credit, but you would not be the one claiming it. Tax exempt entities cannot transfer these credits. Relevant departments involved should have a mutual understanding of responsibility. So, procurement, finance, accounting, legal, the team effort. And a tax exempt entity must own 100% of the asset. Just another thing to keep in mind. So now I'll turn it back over to Torin, and he'll dive into this other tax credit.
Thanks, Emily. So this one is the alternative fuel vehicle refueling property credit, or 30C, as we so lovingly refer to it. Gotta love a shorter acronym. But this provides financial assistance for installing EV charging stations, particularly in non-urban and low-income areas. The initiative supports the development of essential infrastructure to facilitate the use of electric vehicles. And under this tax credit, tax-exempt entities now have an opportunity to reduce the costs involved in setting up EV charging stations, especially in those eligible census tracts. Um, so this credit can definitely help all sorts of different communities build clean energy and electric vehicle projects more quickly, more affordably, and that can mean more jobs, lower energy costs, and advanced innovative infrastructure. But it is 6% of the cost of your charging station, not to exceed $100,000 per item of property. So not per, it'll be per charging station. Can be increased up to 30% if certain prevailing wage and apprenticeship requirements are met. So if there's extra training for those being involved with it, implementing it, operating it, that can add to the tax credit. Like I said, it has to be in a census tract identified as non-urban or low income area as described by Argonne National Labs. We'll go over that map in a minute. And also there's more details, including tax form examples, like I said earlier, that can be found on electrificationcoalition.org. And this is that map from Argonne Labs. So it's the 30C eligible census tract map. This covers almost all of US land territory and covers around 2/3 of the US population. So most of the green area on the map is going to cover um, non-urban census tracts. And then when you get a little bit closer, a little bit more granular, zooming in on those maps into different states, different regions, there'll be different colors. The tan is the low-income community census tract as well. And then also, if you zoom in a little bit more, there are some white spots that may or may not be eligible due to the fact that they are probably in densely populated urban areas. But zooming out, looking at the country as a whole, there are a lot of different places where it is eligible to implement EVSE 430C. And if you want to take a look at this map yourself, play around with it, find the areas in your region, go to anl.gov and check out the map there. On that map, in order to receive funds from 30C, along with the tax forms, the charger will also need a street address or latitude and longitude coordinates. So that is also something to consider when filing. Again, tax-exempt entities are eligible for this 30C tax credit. It is retroactive to the 2023 tax year. Those chargers do have to be fully active now in order to receive the credit. Obviously, we think of charging stations as charging stations for vehicles with 4 wheels or more, but charging stations for 2- and 3-wheeled vehicles for multimodal transportation, in addition to those bigger vehicles, are eligible. And bidirectional charging equipment, vehicle to grid or V2G, is also eligible for 30C. So things to consider with 30C, elective pay is stackable with other federally funded programs. Long list of those: FTA Low-No, CFI grants, Clean School Bus Program, a number of others. And there's also an idea for credit utilization. So if you had a number of chargers for $250,000 for $250,000, and the credit claimed with fair wages and apprentices would be 100,000. So the total cost after the credit would be 150. That would be full capacity usage of that credit. Another example would be maybe buying a charger for 80,000, getting other grants and funding for 80,000 that would cover the full cost of the charger. the potential credit at 80,000 at 30% would be 24,000, but because it is covered by other funding, the credit is reduced to 0. So just have to be conscientious of what funds are being appropriated for EVSE in order to take advantage of 30C.
So,
and Emily's got a couple deadlines for us.
Perfect. So just some things to keep in mind if you are interested in claiming these credits. There are 2 pretty important deadlines. So one coming right up, May 15th of this year. This is the filing deadline for a calendar year taxpayer or taxpaying entity. This was an automatic 1-month extension that happened from April 15th. So keep an eye on that coming right up. The other one to keep in mind is this November 15th deadline for this year. And this is the filing deadline for the calendar year taxpaying entity that received an extension. And so there is a 6-month extension available for first-time filers. And this again is kind of harkening back to that elective pay that is new and exciting. But you do have to apply for this extension. So if your organization is filing for the first time, and this extension would be helpful to you, make sure you take advantage of it, but you do have to apply, so it's not automatic. Additionally, the EC has lots of resources on the IRA and these tax credits. So if you have questions that we don't get to today, again, make sure you're using that Q&A function. We're going to get to your questions at the end. These are all really helpful links that you can go to for more information. We also have annotated tax forms. 8936, 8911 are available right now, and Torrin will talk a bit about those in a moment. We only really have annotated tax forms for 45W and 30C. We won't be focusing on the other tax credits because our focus is EVs, but we are working on having annotated tax forms available for 990T and 3800 as well. Up here on the screen, you can see we have information on elective pay, information on the IRA and EVs in general, information on the IRA and freight, if maybe freight is something that is more interesting to you and your organization. And then we have our EV funding finder that can take you through a variety of funding options for both vehicles and charging infrastructure. And it will ask questions based on your type of entity, type of project you're looking to do, and hopefully end up with some information that's useful for your organization. It also undergoes ongoing updates, so check back regularly on that one. Now to Torrin to talk about a couple of tax forms.
Thanks, Emily. Yeah, really quickly, we do have 2 annotated tax forms that we've recently worked through. So this one is 8911, working on the fuel and vehicle refueling property credits. This one just kind of goes through the things you definitely need to fill out. So obviously parts 1 and 2. This one is a single form that can be used to claim the credit for multiple projects. So enter all of your qualifying projects into part 1, and then projects that meet the PWA or prevailing wage and apprenticeship requirements. Those are the ones that are eligible for 30%. Those would go into part 2. And then the final value entered on line 9 is required to complete 3,800 for general business credits. And then annotated tax form for 8936. This one is for 30C, so you'd be for 45W, the other one was for 30C. Applicants must submit a Schedule A for each of the vehicles they wish to receive the credit for, and all of those forms must be completed before proceeding to the rest of the form, entering basic information about the vehicles, when it was placed in service, and that was the date it was received, not the date that the vehicle was purchased. And the qualified commercial clean vehicle credit is the only eligible option for elective pay applicants. But those are all written out easy to use, easy to fill out your version after you run through that. And we'll be working through a couple others like Emily mentioned. So those are available on electrificationcoalition.org.
Okay, so while we're thinking about EVs and we're thinking about charging infrastructure, we also wanted to bring your attention to another program we're working on that might be of interest to a variety of different organizations that you all represent today on this call. And so alongside Plug in America, EV Noir, and Fourth, the EC is working to get the word out on this electric vehicle adoption leadership certification. So this is a DOE funded program. It launched late last year, and it's really focused on improving charging access at workplaces. So if you're thinking about using 30C, if you already have chargers in the ground, maybe looking to put in more, or if you're kind of in the beginning stages, thinking about maybe charging is something that would go in the ground at your organization, how that would fit. EVAL can be a really good resource. So this program offers planning resources and technical support if you're kind of in that more planning stage, but it also at its core offers recognition for organizations that have already done the work of putting chargers in the ground and making sure their employees have a place to charge while at work. So all workplaces are eligible for this, and it's at its core, it is a nationally recognized certification program. Like I said, it provides technical assistance and recognition for any and all organizations that support the adoption of clean transportation. The EVAL certification badge really indicates the availability of clean transportation options, as well as opportunities for staff. It really distinguishes businesses for their commitment to lowering emissions, specifically through providing clean transportation options for staff. And broadly, it just really signals leadership and commitment to sustainability and addressing climate change. So this certification is really aimed at evaluating what options employees have when it comes to clean transportation. And so chargers are a really big part of that, and that's the bulk of what we're focused on. But other sustainable transportation efforts are also involved and recognized, from micromobility and public transit to carpooling and organization-wide goals. Plus, as kind of a bonus here, in its first year, so until November of 2024, it's free to apply and it's free to get certified. So if you submit your organization's application for certification before November, you will never have to pay to maintain that certification. So it's yours for the lifetime of your organization, and you won't need to recertify. So kind of zooming out a bit, the objectives of this program from the DOE and from our partners is really to develop and execute a nationwide workplace charging program that involves education, outreach, and technical assistance activities that enables a large scale increase in workplace charging. And so we're working on gaining 2,500 employer commitments, catalyzing 20,000 EVSE, electric vehicle supply equipment port installations. Ideally, a lot of those supported with that 30C tax credit, and ultimately achieving 5,000 employer registrations for EVAL. It is an online application, as I mentioned, at evalcertification.com, and they are bronze, silver, gold, and platinum. And so we're really seeing in our work, beyond just EVAL, that employees are starting to look for EV charging when weighing different jobs and organizations. More and more, it's becoming an expectation, because you see folks who, you spend 8 hours a day at work. That's plenty of time to charge your vehicle, and more time than you spend almost anywhere else except for your home. And a lot of folks don't have options for charging at home. And so in making sure we have access at work, we're really expanding the integrity of the nation's charging infrastructure through workplace charging. Like I mentioned, this eval eligibility, it's a really big tent. So pretty much almost any place is a workplace, really, when you look at it. And so employers from all industries, all sizes, that's state, local, tribal government, community-based organizations, nonprofits, private businesses. Doesn't matter if you have 2 employees, 2,000 employees, one campus, a ton of different campuses, it's all eligible. And there is a mechanism, we have our application for individual sites, but we will also have a way to bulk apply. If you have a lot of different sites that have similar charging access, there's a way to get that certification for all those sites as well. Really, the only sites or entities that aren't eligible are home offices. So unfortunately, I work from home. If we had an EV charger in the garage, I couldn't claim eval certification, no matter how cool that would be to have on my front door. And then organizations that have charging, but it's exclusively for their fleet vehicles, and employees couldn't charge their personal vehicles using that equipment, are also ineligible. So like I said, online application, it'll take 15 to 30 minutes once you've gathered your information. And it's just a pretty simple step-by-step process. So you register your organization, work through that eval certification. You can access all the digital resources and templates that we have available on the website, which include how to set up an employee working group to kind of gauge what the need is in your organization, to policies on how do you manage the charger once you have it, make sure people are actually using it to charge and no one's monopolizing it, that sort of thing. You can connect with Fourth or other members of the eval community for additional support. So maybe other entities that are similar to yours have gone through this process. You would have access to kind of working with them. You submit your application once you've gathered all your information, and ultimately receive your certification and get recognized for all the work you've done to catalyze clean transportation at your workplace. For the certification itself, there are 5 sections. They are employee engagement, so making sure that you have an understanding of employee e-mobility needs. Planning and evaluation is the second stage, and that's making sure there's some planning and evaluation that has gone into your workplace charging program. So you're not just coming out guns blazing, you've thought it through a little bit. Mobility incentives is another component of certification. So seeing what you have available to incentivize your employees to utilize clean transportation. So then there's the EV charging piece that's a pretty big piece of the certification, but certainly isn't all of it. So making sure you're expanding access or implementing access to EV charging stations. And then there is a section on innovation. And so that's really, what are you doing more broadly to be a sustainability leader in your community through innovative programming, maybe partnerships, that sort of thing. So then looking at, you've gone through all the steps, you've received your certification, what does it look like? Well, you'll have access to an exclusive roundtable working group on workplace charging and workplace transportation sustainability. There will be a spotlight on the EVAL website for all certified employers, access to the 4th Roadmap Conference and a highlight there. A workplace spotlight, that's for platinum organizations that receive the platinum certification. And we'll really dive into what your organization has done, how you're a leader in this space. And ultimately, all organizations that certify will receive a digital badge and signed certificate, as well as a kit to promote their certification. So we already have quite a few organizations on board. Your organization could be next. There's really wide variety here, from cities and local governments to economic development associations and hospitals, universities, utilities, private companies. Like I said, almost everywhere is a workplace. So it's a really big tent. Come join us. We're having lots of fun. So again, this just gets started today at evalcertification.org. Lots of resources, more information, and as well as that application for certification on the website. So feel free to put questions relating to the tax credits and also eval into the Q&A box. But with that, I will turn it back to Torin for the Q&A portion of today's webinar.
Thanks, Emily. Yeah, so there's a lot of information on tax credits, a lot of desire from this larger group to get EVs and EVSE on the road. There is no doubt there's going to be some crossover with some of these organizations that have joined us today that will be making that available to their workforce. So happy to have you all join us with the eval certification again. That is free to join, free to participate, and we very much look forward to you guys joining and sending us questions about it. But I'd also like to invite a couple of my colleagues, Brant Hertenstein and Jessica Stoll, both program managers with the Electrification Coalition, both work on IRA funding, work on communications and relationships with different municipalities, city work, state work, a lot of different hats, but both of these folks have a lot of good information and knowledge. And we've gotten a lot of good questions in the Q&A feature. So thank you all for sending your questions there. Going to jump into a couple of them. So the first one we got was about the elective pay portion and about the tax credits now working like a tax refund. Does it work like a tax refund? And if so, can a dealer take that out at the point of sale? So I had that one for Jess.
Yeah, thank you, Torin. I'll say with elective pay that yes, essentially this is working like a rebate. You'll file your credit and then you'll get your money back ultimately when the paperwork goes through, depending on how much money you claimed. So I'll point out this is a really great opportunity for anybody that's eligible for elective pay to really help finance and offset some of those costs related to these projects that you may be doing. I will note too, something to be aware of is tax credits can't ever be double counted in this space. So make sure that, you know, somebody like the dealer isn't taking the credit and you are also trying to take the credit. And some of where this question may have come from is it's important to remember that there's a difference between 30D and 45W. Both are related to electric vehicles, but just make sure that you are talking about the same credit. Typically 30D is the one that's required, is referring to the point of sale with the dealer. So keep an eye on that and just make sure things aren't being double counted.
Yes, thank you, Jess. Yeah, there's a big difference between 30D and 45W. I'm glad they have different alphanumeric abbreviations for them, or else we'd get even more tripped up than we already do. But great question. Jess, I had another one for you. What costs are included in the infrastructure credit?
Yes, this is a great question and one that we have been seeing quite a bit. So generally speaking, we've heard from the guidance and through just talks with those within the tax credit space that anything that makes your station operational is what should be counted under that. That said, I think we all know that charging station projects can ultimately have a lot of different moving parts, a lot of different expenses related to them. And so with that, I'll definitely recommend that you check with those you're working with. If you have any other, tax people on staff or any other people you're consulting with, to take a look and see what you're claiming, and always refer back to the guidance as to what is included in making the station run. Ultimately, we want to make sure that we're claiming the correct things, and these projects are very, very specific to one another, so it's kind of hard to generally speak on that. So take that as general advice and then move project by project from there.
Thank you, Jess. Had another one. What, if any, are the minimum requirements to be certified with eval? I can take this one, and if I'm leaving anything behind, Emily, feel free and back me up. But there's a lot of different, there's actually not really that many requirements, but there's a lot of different ways to get certified. that questionnaire and certification process isn't completely reliant on your EVSE implementation. You can still be eval certified without chargers in the ground as long as you have a plan and desire to want to put EVSE into your workplace. You can still get certified. But there is a bottom threshold for that bronze certification. So you still need several different points from several different sections in that certification to get certified. But you can kind of just be in on the ground floor trying to get greener options for your workforce. And if more EVSE or more green projects come along at your workplace, you can always reapply and recertify for a higher level.
And a breakdown of the certification questions, as well as how many points correspond to each level, with bronze starting at 15 points and platinum topping out at 100, is available on the EVAL website. So again, that's evalcertification.org.
Awesome. Thank you, Emily. Had a couple other questions in here. Actually, I think, Jess, you might have covered this one already, but good to address it outright. Can you apply for 45W if you're leasing a vehicle?
Yeah, that's one we're still trying to get some guidance on. The most direct path, as it seems now, is if you're purchasing the vehicle. Leasing just sets up some structures that are quite different. So I'd say keep referring to the guidance, and then we'll also be pushing out more information as we hear more about that.
Awesome.
And Brant, do you want to add anything to that?
Just that, 99% of the time, leasing is not going to be an available option. There is, based on what a tax professional has relayed to us and others, is that there might be some mechanism to get past it, as in a loophole. But for now, it is primarily for those who are purchasing and owning the asset.
Awesome. Thank you both. Had one for Brant. So this one goes to the question about HOAs. Are nonprofits like HOAs eligible for elective pay?
Yeah. And thanks for the question. Thanks for all the questions for everyone on this. We've gotten so many that we're not going to be able to get to all of them. We're going to try to answer as many as we can. And there's just so many different facets of elective pay that we're all trying to sort out. So appreciate some of the people answering the questions in the chat and the others that are putting in the questions. In regards to homeowners associations, so this was one of the questions that was up for debate whenever the proposed guidance was out, and then the final regulations came out, and it gave a little bit more clarity. What I would like to do is direct you to our friend Amy Turner from the Saban Center. She has a blog out that came out right after the final guidance for these certain ones came out. I'm going to put it in the chat so everyone can see it, but at the same time, I will read from it because I think it's useful information. It says that homeowners associations, as defined under Section 528 of the Internal Revenue Code, including certain condominium management associations, residential real estate management associations, and timeshare associations, are eligible to use elective pay. Ultimately, she says homeowners associations should take care to ensure that they are among those that do qualify to use elective pay, including consulting with a qualified tax attorney. So it does look like there are some homeowner associations that will be able to take advantage of the elective pay tax credits. I know people are thinking about possibly charging stations for homeowners associations, but also some of the solar tax credits that are involved there. And so you just need to make sure that you are among those that are defined under the Section 528 of the Internal Revenue Code. I do apologize for not being on camera. I don't know why it's not working on my Teams. I literally just came on it and do apologize that I can't show my face right now.
No worries, Brant. Thank you very much for joining us and talking us through it. I do have another longer multi-part question for you. This one asks, can you stack 45W with the electric school bus rebate grant? And if there are any funds left over after the rebate. Also, is it for each vehicle or one per entity? Likewise, can the 30C be stacked on top of what ESB rebate grant offers?
Sure. So for the thanks for the question. So for the Clean School Bus program, it is a stackable program. So you can use both the Clean School Bus funding that you have gotten. In addition, you can use the elective pay up to the amount, the total cost basis of the vehicle itself. So if a vehicle is $400,000 and you got a $375,000 grant from the EPA for your Clean School Bus funding, you can get the remaining $25,000, but you can't get the full $40,000 because you can't actually make money on the purchase of any electric vehicle. So you can bring up that cost basis to zero, and you can therefore use elective pay in that capacity. As far as the question of multiple entities, so you are able to do it for each vehicle and each charging station. It's still being based on what 89 or 8911 and 30C say. The big question is item of property, and the way that we are interpreting it as of now, and again, this may change, and we always are going to have a disclaimer that anything that we say on this could be subject to change once we get more knowledge and more information from tax professionals and other people, subject matter experts. But as of now, each charging station, we believe, is eligible. So you can do each charging station and regardless of the number of ports, and that can go up to $100,000 of each station.
Awesome. Thank you, Brant. One more for you. Can you explain the IRS deadline? If an entity were to purchase an EV after May 15th, but not file for an extension, can that organization apply in 2025, or have they missed the window?
Yeah. So right now, a lot of tax exempt entities, a lot of entities are trying to file their taxes. April 15th deadline was that for so many people. The way that it's written out in the final regulations is that if you're a city or a tax exempt, if you're a city or a tax exempt organization like a city, and you go by different fiscal years. So, or sorry, if you go by a different fiscal year other than the calendar year. Let's say that you are a city that goes from June to or July to June. And you put yours in July of 22 as your fiscal year start, and then you bought a vehicle in January of 2023. Just because you're in that fiscal year 2022, you can still be eligible to get that tax credit because it started in 2023. Emily had mentioned it in one of her slides about this being retroactive to 2023. So the tax exempt entities have a choice to use the calendar year or their fiscal year, whatever they want to do. I encourage you and implore you that you should be taking any tax documents, any receipts that you have, and making sure that you keep them nice and close and file them along with your credits, so that it is very easy for the IRS to understand that you bought this in 2023. We are applying for 2023's tax credits, and this is when and how we did it. So right now, April 15th was the deadline. There was an automatic 1 month extension, so now we're talking about May 15th. For those who are first time filers, you can get a 6-month extension, so that can go up to November 15th of 2024. And again, these extensions are all for everything related to your 2023 taxes. So if you bought something in 2024, you're not going to be able to get the credit until 2025 when you apply in April of 2025. For those first-time filers, one thing is that we would like to just kind of just put out there, because we have heard a couple cities find out about this without really their knowledge, is as a tax exempt entity, you probably think, hey, we are a first-time filer. There are some cities who had to file a tax for one reason or the other, because they had to report revenue or something like that they didn't expect to happen, and so therefore they're not under that first-time filer provision where they can get an extra 6 months. So I still think you have to file an 8868 in order to get this extension, but for all first-time filers, anybody who does file it should be able to get that 6-month extension. So now we're working with six additional months to get all of our taxes figured out.
Thank you, Brant. Yes, a lot of information to cover. IRS is trying to put out all sorts of guidance, but Brant is here to help us out as well. I have one more for Jess. had a question about are hybrids eligible for tax credits, specifically 45W?
Yeah, great question. This is something I like to point out. There's a difference between full electric vehicles, a plug-in hybrid, and then just a plain hybrid. So those plug-in hybrids are eligible for half of the credit. So it's 50% of the 7,500. And then those full EVs will be eligible for the full amount.
Awesome. Brant, one more for you. It was a question on property. So can you clarify what property means? For example, parking lots, does that count as property, or is it a piece of EVSE?
Yeah, so this is something that kind of changed between the Inflation Reduction Act's new guidelines versus the old guidelines. So, before Inflation Reduction Act came out, it was you could get up to $30,000 per site for your tax credit. They changed the wording a bit so that we can actually get more funding out the door, and so that would be it's changed from $30,000 per site to $100,000 per item of property. Again, the item of property I think is intentionally vague. We're trying to get it figured out of what exactly that means. But from the best that we can see from the IRS website is that an item of property is the infrastructure that we're talking about. And so if let's say that you were talking about a parking lot, let's say that you put 4 charging stations at your parking lot, you could, and they exceeded $100,000. We believe as of now that you could get above 100,000 because it's per charging station and not per site. And so before you would only be able to get up to 30,000 per site. So everything on that parking or in that parking garage or in that parking lot would have just been up to 30,000. The new guidance says $100,000 per item of property. And again, we're trying to get 100% determination of whether that means again, more like a site basis, or did they change it specifically for charging stations? So hopefully, if you have 4 DC fast chargers that were really, really expensive, and the cost basis was greater than what would it be if 30% of whatever 100 0.3 divided by 100,000, then you would be able to claim each charging station. And so on your 8911, you would be able to put that you're over that 100,000 threshold because you have 4 stations rather than just 1.
Constantly changing landscape, constantly evolving recommendations from the IRS. So we're trying to get that information to you all as fast as possible. However, it doesn't always come out immediately. So as soon as things change, it'll be available on electrificationcoalition.org. So we appreciate all of your patience. One last one before we go. Had one for Jess. Does the 30% credit for 30C apply to the full project, including installation, or the EV charger only?
Yes, so this one was somewhat covered. This is something that definitely varies by project. I did want to read what we heard. So anything needed for the system to run, like the conduit, wires, switchgear, and wire harnesses is covered. We are still waiting to hear, though, if things like legal guidance are able to count under that.
Awesome. Thank you, Jess. Recognizing time, want to thank everybody for joining. If you guys have further questions, you can always contact us, T. Spencer, electrificationcoalition.org, or Emily Pape, ePape at electrificationcoalition.org as well. Go at our website, electrificationcoalition.org, check out the resources there. But we also wanted to thank everybody for your time joining us. Thank you for all of your questions and engagement. We really appreciate it. We're looking forward to pushing out more resources and information to you in the coming weeks and months as IRA and information from the IRS evolves. I want to turn it over to Emily for final sign-off, but wanted to say thank you from myself.
Yeah, thank you all for taking the time today to talk really fun things about tax credits. And again, we're here to be a resource. So reach out with remaining questions, projects you're working on, anything we can support. We're happy to help or direct you to other folks who can. So thank you very much for attending today and have a lovely rest of your Thursday. Thank you.
Thank you all. Have a great rest of your day and the rest of your week. Bye now.